Well, howdy there, folks. I hope you are ready to get your flapjacks flipped this week. We have an absolutely insane, and I mean absolutely insane week ahead, folks. We have the two most important stocks in the entire stock market of 2023 have huge news happening this week, okay? We're going to discuss that, what I think is going to transpire there, all those sorts of things. We have so many other various massive factors going on this week. It's Thanksgiving week, right? So you may think this might be, usually sleepy week. We're going to look back at data throughout history, and you're going to find many times certain stocks do exceptionally well during Thanksgiving week, while others ultimately falter. I'm going to share some words to wisdom in this video, especially toward the end of this video as well, that I think should help a lot of long-term investors out with kind of some perspectives and whatnot. So this is an action-packed video, folks. I hope you enjoyed today's video. I appreciate you joining me as always. And also, I'm very interested because I know where I was at this time last year as far as my portfolios, and I know like what a huge difference a year has made. Like, let me know how much your portfolio's up in the past year versus, going into Thanksgiving week last year. I'd love to hear from you guys in the comment section because I know for me, we're talking big numbers, big numbers in regards to the amount of difference in just a year over year. I mean, what a difference a year makes, okay? Alrighty, so let's start getting through all this and into all this, okay? So, first off, if you want to know how the stock market usually does Thanksgiving week, usually performs very good. So this looks back at this was a study that was done back last year. And so I looked at like a 71-year kind of past history. And out of those 71 years, 21 years were red. 50 of the years were green. Also found that 7 of the years were around a 2.5% gain or bigger for Thanksgiving week overall, while only 3 years were 2.5% or more negative. So the moral of the story in regards to is this week likely going to be a good week or bad week, the probabilities will tell you it's a very high probability it's going to be a good week overall. Now, will it be an exceptional, crazy good week? I don't know about that. But the bottom line is most years you're going to see a very green market during Thanksgiving week. Now, you may say, what stocks perform very well during this week? There's a very specific group of stocks that tend to outperform significantly in this week. It's this, okay? So Investopedia, this is a good article. So from 2001 through 2022, the S&P 500's overall performance around Thanksgiving holiday has been mixed, seeing positive returns just half the time. Over that time, the S&P 500 had more than 1% gains, just 3 Black Fridays in 2001, 2007, 2012, but fell as much as 1.7% in 2009. The U.S. sector that thrives the week before Black Friday to the week after is retail. Over the past 10 years, the retail sector has generally outperformed the S&P 500 during that period. Investors may follow trends in the retail sector, funds in stocks like the Spider, S&P Retail, XRT, Amazon, Walmart as shopping season begins, right? There's obviously a lot of excitement around kind of retail-related stocks. So, you know what I said? I said, let me just look at the retail stocks I hold over the past 5 days. And I want to see, like, what's the performance of these stocks just in the past 5 days so far? Are these ones prepping up for maybe even bigger gains? And here's what I found. The performance has been simply stunning. Foot Locker stock is up over 9 percentage points in the past 5 trading days. Nordstrom stock is up a whopping 15.33% just in the past 5 trading days. By the way, they report earnings this week, just one of many stocks reporting earnings this week, and we'll get into that in just a moment. Revolve stock is up 9.4 percentage points just in the past 5 trading days. Shopify stock is up over 10% in the past 5 trading days. Target stock is up over 20 percentage points in just the past 5 trading days. And the lagger of the bunch that I own is Amazon. Only up 1.55% in the past 5 days, right? I think some of that's rotation from the mega caps into other areas of the market. And I think that's why you saw a lot of these mega caps kind of chilling out a little bit here recently. Like, they still have gotten gains here recently, but the gains are very muted, which ultimately tells me likely money's coming into the market for Santa Claus rally, but you're seeing ultimately a rotation. So my assumption is if we didn't really see any big influx of money putting buying pressure on the market, there would be a pretty high probability that actually the mega caps could be actually down here recently, okay? So Nonetheless, folks, retail stocks generally perform tremendous during this time period we're in right now, and even going into December. And certainly, if you look at just the data, it's playing out again like that this year as well, right? Now, I'm very interested in what happens in the market this week because let's just call it what it is. The last 3 weeks have been ridiculous. This is the public account, right? The public account has gained around $200,000 or more of value just in the past 3 weeks. 3 weeks, over $200,000. That's a major, major move. And I'm kind of looking out there and I'm kind of curious about this, okay? I'm thinking, this is how I'm kind of thinking about this market, okay? I'm a little worried here that if we continue this run we're on over this next week, week and a half, going into December, I'm wondering if it's like Santa's already come at that point in time, and maybe we're not going to get any bigger Santa Claus rally because we've already had the Santa Claus rally. That's what I'm actually thinking about, right? Because I'm just looking at this market, I'm like, damn, this is a hell of a run we're having here in November. If this baby keeps rolling, maybe we'll have pulled all gains. But then I hear some of these folks talking, like the Tom Lees and the Dan Ives and some of these guys talking about their expectations going into year end, and I'm like, maybe there is further to run. And then I think about how many fund managers need to catch up to S&P 500. I'm like, damn, maybe there could be a bigger pile in here. And then also think about the fact that there's no tax loss harvesting in any of the biggest stocks in the market this year because they've all performed so tremendous. And so not a lot of people probably want to take gains this year. Ultimately, a lot of them will probably delay gains taking in many of the big techs until probably Q1. If they want to take gains, that is. Not everybody always wants to take gains, but there's probably a certain segment that's looking and they're like, I want to get out of these, but I don't want to get out this year to have to pay my taxes. I'll wait till January, February to get it out and then kind of make moves from there. So, yeah, man, I am a little curious if we're going to have ran through our gains here, right? You look at a stock like Palantir. Palantir's now crossed over $20 a share. That one just continues to run. And I'm like, damn, does this baby still have more upward momentum this year? This is a pretty incredible move, right? Looking at Meta. Meta just crossed a new high as far as a 52-week high. 335 this one just closed out at, right? By the way, in regards to Meta, they actually have something additionally good going on in their business model right now. So Elon Musk did some stuff, okay? And nonetheless, there's a lot of major advertisers that are not happy with some of the stuff he said. And as I stated with you guys before, he needs to watch out, especially when he speaks about certain groups, because I'm just telling you, there's big money, and that changes everything. So you see companies like Apple, Disney halting ads on X. This is like, as an advertiser, this is when you make your money. This is like, are you freaking kidding me? There's no worse time to have all the advertisers pull their money than right now. We're going into Black Friday week, and then you're going into the holiday season. Come on, man. You cannot screw this up. And Elon Musk, did some stuff, and now all these guys, Apple, Lionsgate, Paramount, CBS, all these guys, Disney, they're all pulling advertising left and right. And so I'm like, damn, man. And so where's that money ultimately got to go? It's got to go over to Meta, right? Because if you're not going to advertise over there, then you better advertise extra additional money on Instagram, on Facebook, anywhere else. So I was just thinking, man, not the time to do that, man. Not the time to do that. Okay, so next up here, absolutely massive earnings coming this week, okay? Massive earnings. On Monday, after the bell, we have Zoom reporting earnings, which has been a pretty beaten down stock. Actually, the valuation is pretty intriguing on Zoom overall, I will say that. Trip.com's reporting on Monday after the bell as well, which is going to give us a little insight into the travel industry. But the big action is on Tuesday. You want to talk about a retail bonanza? Whoo-wee! Kohl's, Lowe's, Best Buy, Abercrombie, Burlington, Dick's, and American Eagle all reporting before the bell on Tuesday. And then the most important stock in the entire stock market in 2023 reports after the bell. NVIDIA. We'll get into NVIDIA's numbers, my expectations, what I think is going to happen in NVIDIA stock in just a moment, okay? Nordstrom, Urban Outfitters, and Guess also report after the bell on Tuesday, okay? Now, I am going to be doing an insane Twitch live stream on Tuesday. So if you want to join me for that, check out the description area down there. I might even have it as a second pinned comment down there, okay? As a second pinned comment. If you want to join me for that one, we're going to react to the earnings live. I'm going to listen to the earnings call live on Twitch and all that good stuff. That's going to be a crazy earnings, okay? Now, If I was to judge the most important stocks to the stock market in 2023 specifically, NVIDIA is by far and away the most important stock. If we're talking about setting the whole vibe of the stock market, they've been the whole one behind the AI movement in the biggest way possible. They are the crown jewel. They are the king of the stock market in 2023. It's clear, right? And then there's a gap between them and the next most important stock in 2023. The next most important stock in the entire stock market in 2023 is Microsoft. Microsoft has some huge situations going on that we're going to discuss and how that's going to affect their stock in just a moment as well, okay? Then after that, it's everything else, to be honest, okay? And it's way down there. Those two guys run the market, and we have insane news coming on in regards to both those. NVIDIA's earnings and Microsoft's a whole different situation that we'll get into in just a moment. No, this is a brutal setup for NVIDIA. I'm just going to be honest with you guys. The stock is up 244% year to date. 244% year to date. That's a brutal setup. Now, does it mean NVIDIA stock is overvalued? No. When you talk about valuation, you're really talking about forward Ps. You're really talking about trailing 12-month Ps. When we're talking about a brutal setup, we're speaking about when your stock just continues to run and run and run into an earnings because your expectations are through the freaking roof. And let me be very clear. NVIDIA's expectations are beyond the roof. They're up there in the sky right now, okay? They might be out of orbit now at this point in time, okay? NVIDIA's expectations are a whole different level. Now, in terms of the last couple quarters, NVIDIA's come in with huge beats. And we look at their fiscal year first quarter, which was the April quarter, they came in with a big EPS beat of 17 cents. That's a big beat there. And then they came in with a beat of $669 million beat in terms of revenue, right? And then they had another massive guide up, and then they destroyed their Q2 numbers as well for the July quarter. They beat by 63 cents on EPS, and then they beat by $2.4 billion their numbers that people already thought were astronomically high in general, right? So, like, now everybody's gotten used to, like, NVIDIA just coming through, and the expectation is almost like NVIDIA has to come through with some massive epic beat, right? Now, here's where the setup starts to get really, really difficult, and this is why if NVIDIA does not come through with an epic beat, you know what's going to happen to their stock price? If they do not come in with epic beats, their stock price is ultimately going to fall. Even if their numbers are good, even if they come in with beats, they have to come in with epic beats now at this point in time, okay? Everybody's so, like, accustomed to this. And the reason being is, if we look at their projections and numbers here as far as analysts, right? They're them doing almost 500% EPS growth in this current quarter they're about to report, and the next quarter, 331% earnings per share growth. As far as revenue goes, they have 171% revenue growth in this current quarter they're about to report, and the next quarter they're expected to have another acceleration higher to 193%. Now, if they just roughly come in line, that's going to be seen as an L for NVIDIA, because then worries are going to start coming into, because 28 analysts already have number projections out for their fiscal year first quarter 2025, which is their April quarter. And those projections are at 18.5 billion, which is another leg higher of growth versus the January quarter, right? And so if they just come in line, I can tell you analysts are going to start getting worried about can they actually hit that number. And then some of the excitement starts to fade in NVIDIA pretty darn rapidly. This is why it's important they come in with big beats, but then on top of that, they guide significantly higher, maybe $500 million or a couple $1 billion above what analysts' expectations are. Then you can talk about the momentum can continue in NVIDIA, and NVIDIA stock could run to $600 by year end in some sort of situation like that. But if there's any hint that maybe growth is starting to slow down, the reacceleration is slowing down in a major way, I can just tell you guys, it's going to very, very negatively affect NVIDIA stock. I'll put it to you like this, right? A stock like Target, horrible, the stock's been devastated, right? The setup was phenomenal going into their earnings. And guess what? Target reported revenues that were down. And yet the stock blasted higher. The stock's up over 20 percentage points in the past 5 days. It went 17.5% up on earnings day after they reported a down revenue number. Why? Well, the setup for Target was horrible going into those earnings. It was praised for the end of the world. And so when they didn't come in with that, the stock saw a massive pop. Now, on the flip side with an NVIDIA, they're expected to be the conqueror of the world. And if they don't conquer, I mean, ultimately, they're just like seen as what? I'll put it to you like this. I'll explain it to you like this, right? Imagine you have two kids, right? And this kid, it usually gets straight A's every year, right, in school. And then, end of the school year comes and they bring home their report card and it's B's. You're kind of like, damn, like what happened? Like disappointing. Like you always get straight A's, like you get B's, like, Like, what's going on with you? Are you having some troubles? Like what's going on here, right? You're like very disappointed. And then your other kid that every year they bring home the report card and they get straight C's and they're just the most average student in the world, right? And then they come home one year with a report card that's all straight B's and you're like, whoa, you're like so impressed. And so the same kids, got or two different kids, they got B's, but one you're super impressed with and one you're super disappointed with. This is a stock market. And this is an NVIDIA versus Target situation. And so you got to have the straight A student come in with straight A's, or then it's not good enough for straight A's. It's A pluses, right? It's perfection. That's the tough part, right? And that happens in the stock market. Now, to make matters more insane this week for the market, Mr. Softy, the $2.75 trillion market cap that just hit all-time highs literally last week, is in a world of drama. And I mean, they're at the center of the drama sphere right now. I mean, it is crazy, okay? So OpenAI, they kicked this dude, Sam Altman, who's been the CEO of the company and really the one behind this project for the most part. They kicked him out. They said, you're out, dude. You're not going to be the CEO. Now, first off, this has been what's had all the hype from the private market perspective, right? If you look at the stock market, all the hype's around NVIDIA. If you look at the private market, all the hype's around OpenAI. And in terms of OpenAI, Microsoft owns about 49% of the company, from what I recall. And so this is a crazy situation where all of a sudden you thought this company was perfect and it's going to be a huge help to Microsoft and it's at the cutting edge of AI, and then all of a sudden the CEOs oust it. And so what a lot of people started thinking, and even myself, I was kind of thinking, I was like, maybe something happened where, let's just call it, you have to fire the guy. It has nothing to do with business performance, but there was something that was found out about him, maybe him and some other employees that you're like, we got to get rid of him. So far, no news has come out in relation to anything like that. And so everybody's so confused, like, why is this dude just like kicked out of the company, right? And so I'm thinking like, this is going to have massive ramifications for Microsoft stock overall this week. And here's the weirdest situation. If they bring him back, which now all of a sudden there's rumors about him coming back, I think that's even a worse look, to be quite frank. That would be like your spouse bringing you paperwork saying they want to get a divorce, and then a few days later saying, oh no, I changed my mind, I don't want to get a divorce now. At that point in time, like the cut's already deep, like it's already like, wait, what's going on here, right? That's this OpenAI situation. Dude just got ousted as CEO, and now all of a sudden they're talking about bringing him back a couple days later. I don't know if that sits too well with him, with other employees. I think that could create a lot more distraction, even bringing him back now at this point in time. That's one of those moves, like if you make that move, make your move and be done with it. So this is weird. This is one of the weirdest major company situations I've seen in some time, man. And I don't know how that's going to shape up Microsoft stock, but all I know is it's going to cause a lot of volatility up and down in Microsoft this week overall. I mean, the biggest bet's probably to the downside, but who knows? All I know is it's going to be very volatile. Now, it's funny. It was a week or two ago, I mentioned that I think Warren Buffett should buy PayPal. It's a perfect stock for him. It's at such an attractive valuation. Like everything, I studied Buffett for 15 plus years, and everything I've always seen with Buffett, like this is such a perfect stock for him right now. And I mentioned that, and all of a sudden there's starting to be these other rumors about could Warren Buffett actually be buying PayPal shares right now. And there's more rumors about this starting to happen because all of a sudden he made this new bet on a company secret. And I guess he got SEC approval, which is a pretty interesting. I didn't even know that was possible, but Warren Buffett, he can pull some strings. I guess he got SEC approval to basically make it secret what stock Berkshire Hathaway's buying right now, so they don't spike the price of that particular stock, right? And so this has led to even more like, well, it has to be a kind of a bigger name company, but not so big name that like $1 trillion plus company, because he's not going to move something like that dramatically. It's probably something in the tens of billions or maybe around $100 billion. And as far as PayPal goes, PayPal's sitting at about a $60 billion market cap. So if word did come out that Warren Buffett was buying PayPal, I can tell you there'd be a crazy big spike in PayPal shares, because a big enough market cap to make sense for him to buy. But it's one of those market caps, like once the news came out that he was buying, the shares would spike significantly because it's not a big enough market cap. I guess you can say that, okay? Now, I don't have any, I'm looking at kind of the way the stock's performing. I don't think there's any evidence that Buffett's out there buying. I think we'd see a bigger upward move in PayPal if Buffett was actually out there buying PayPal actively right now. So I'm not convinced at all he's actually making a move in regards to this one. That's my personal opinion in regards to that. Now, John Deere is reporting, okay, and this leads into kind of a good words of wisdom kind of conversation here I need to have with everybody on just becoming a better investor, okay? John Deere's reporting on Wednesday, right? And this stock is a great company, by the way. John Deere's a phenomenal company, but ultimately the stock price has basically gone nowhere for the past 30 months, about 2.5 years or so. The stock has done absolutely nothing, right? And at the end of the day, I look at a stock like Deere, and I look at a stock that stole a lot of the gains from the future. This stock made a parabolic move. Now, keep in mind, John Deere's stock should go up over the years, right? It should not make parabolic moves. There's no sudden massive change in John Deere's business model that all of a sudden made that stock spike massively in 2020 into 2021, but it made that move. And so it made such a huge outsized move that it ultimately stole massive amounts of gains from the future. Now, this happens with stocks in the market. It happens all the time where a stock will go up massively and it will steal gains from the future. And technically, every stock that goes up over time is stealing some level of gains away from the future. This is something important. Same thing with indexes over time, right? Doesn't mean they can't go up. It just means they're stealing some form of gains from the future, right? I look at a stock like Tesla. Tesla has done nothing for 3 years, folks. 3 years, right? 3 years, it's done nothing. Now, what did I tell you 2.5, 3 years ago? I told you a stock like Tesla can go through a several-year cycle where the stock goes nowhere. Tesla stole a lot of gains from the future. I've watched Tesla stock go through a 5 to 6 year span where the stock did nothing. Prior to me getting in that stock and it going on its beast run, the stock did nothing for like 5 to 6 years. So now the stock's done nothing for 3 years. That's not out of the realm of reality for Tesla. It's done this before. And this happens with a lot of stocks in the market, but especially momentum stocks. They'll go on an epic run, ultimately steal gains from the future, and then the stocks go nowhere for sometimes years, right? And as a potential buyer in the stock, it gives you a pretty, let's call it appetizing opportunity, but it goes nowhere for years, right? If we look at the NASDAQ, for instance, even this indexes, this can happen as well, right? The NASDAQ is technically down in the past 2 years, down quite significantly as well, right? Down about 1,500 points or so in the past 2 years. And it's close to actually being where it was roughly 3 years ago. So it's made very little gains in the past 3 years. The NASDAQ made such an epic run, it stole a lot of gains from the future. And then you have to have this process to go through where either that index or that stock goes nowhere for quite a while, right? Now, in the stock market, when it comes to indexes or stocks in general, they're going to go up when they want to go up, not when you want them to go up. So many times people, investors, they think like, oh, this stock's going to have to go up next year or next month or something like that, or this is the bottom right now. It doesn't work like that. This is why, there's a famous expression in the stock market or saying in the stock market is time in the market beats timing the market. Now, what I'll say personally is timing is still extremely important when it comes to buying individual stocks and what prices you get in, right? You could buy PayPal for $50-something this year. You could have bought it years ago for $300, right? You could have bought Tesla 3 years ago or 2.5 years ago or whatever for $400. You could have been buying at the beginning of this year for $101, right? So they're both important, but at the end of the day, it pays actually very handsomely to stay invested over time because you don't know when you can think, I know exactly when the market's going to go up and when these stocks are going to go up or when they're going to go down. It doesn't work like that, okay? And I've just seen it time and time again in the market where stocks make some incredible moves when you're least expecting it, when actually it looks scary out there, right? With 2023, it's been a kind of a scary year. Let's call it what it is. There's been a lot of problems still this year, right? And there's worries about next year and all sorts of things. And if you were like, it's going to be a bad year next year and you weren't playing with the greatest companies in the world, think about the gains you've missed out on. You've missed out on 40%, 60%, 80%, 100%, 200% gains in countless of these stocks this year, just in the last 10 to 12 months. That's incredible to think about that. You've lost potentially years of compounding because you thought you could time it out, something like that. It doesn't work like that. These stocks and the indexes will move when they want to move. Not when you want them to move, not when the coast is clear and everything looks good now. It's not the way this works. Actually, many of the biggest upside moves in the market in history happen when it's super scary out, when there's a million things to be worried about and concerned about. That's when many times you see the biggest upward moves ever. And if you miss out on just a few of those upward days over time, it completely changes the way you compound money over time. This is why I always stay invested in the market, despite all the BS that's going on. And are there times where I think, man, maybe I should just cash out of the market? Sure. And I even thought that during the Rona crash. I thought that during March 2020, and I stayed invested. At the end of the day, regardless of what's going on, it always has paid and always will pay to actually stay invested in the market, despite all the scariness going out there, right? These stocks and the indexes will move when they want to move, right? If I take a peek at my Magnificent Seven, right? This is my Magnificent Seven. These are the 7 biggest positions I have in the public account, right? Which has started, 5-6 years ago or so now. And account's done, tremendous over the years, right? And up $386,000 on Meta, up $350,000 on Tesla, up $39,000, almost $40,000 on Amazon, up $64,000, almost $65,000 on Palantir, up over $100,000 on Elf, down $17,000 on PayPal, up $12,000 on Skyworks, right? Those stocks all will move when they want to move. I think PayPal is probably going to make a huge move in 2024 to the upside. It might not. PayPal will do its thing when it's going to do its thing, okay? Skyworks will make its next big move when it makes its next big move. I don't think this year is going to be great for smartphone sales. I really don't. But with that being said, who knows? Maybe Skyworks flies this year. You can't predict exactly what year or when this stuff's going to happen. And this is where a lot of retail investors get in trouble with call options, because they think, I can know exactly when the stock's going to go up. This is when it's going to go up. This is when it doesn't work like that, guys. Okay, and that's why you have to be very careful with call options. And I understand they're exciting in those sorts of things, but if you do ever mess with those, you want to usually mess with leaps, like in way out there leaps. Like sometimes you can buy leaps. Like right now, for instance, on stocks, you can get leaps that are over 2 years into the future. Over 2 years in the future. So at least if you're doing something like that, you give yourself some time. But the shorter term stuff is even a whole different level of crazy, because now you're betting like basically you can time out the market on a week by week or month by month basis. And that's damn difficult, man. Damn difficult. Now, retail a lot of times can get very frustrated with their stock because sometimes they're not doing anything and they want to see action, action, action. Don't feel like you need action all the time in the market. Many times the best markets to participate in are not the action-packed markets, are just the markets that will drift higher, then they'll come down a bit, and they'll drift higher, and they come down a bit. And, those are the best freaking markets to be in. Those are my favorite markets, actually. I don't like a parabolic market. I don't like necessarily a Russell that's going up 30, 40% in a year. Like it sounds fun and is fun, but many times you're in some sort of chaotic environment during that time, and you could be stealing gains from the future. Don't feel like you need action all the time. Don't feel like you need action all the time, okay? Action sometimes is the enemy, right? And the other key is diversity. Diversity. If we look at the public count, this is all calculated by Fidelity Investments. We've outperformed the S&P 500 quite significantly. And that's despite some horrible, gambling type decisions I was making in 2021. And even with that, still significantly on a 5-year basis outperforming the S&P 500. Whether you want to look at time-weighted rate of return, money-weighted, and wait till November numbers hit, because I've had a huge November. My 5 years kind of way outpace the S&P 500 overall. Diversity was key in that. If you hold 10, 15, 20 stocks, there's a good probability some of those stocks are going down in a particular time, and some are probably making some parabolic moves upward. Some are probably chilling out. And that gives you at least a feeling of action, but also diversity in your key. Because too many people get caught up in just 1 or 2 stocks. It's going to ruin you. That stock goes bad, you're done. You're done for, your portfolio's done for. Diversity is key if you want to try to beat this market over time. I can tell you that much. It is very freaking key. There's no way, if I wasn't diversified over this past 5 years, there's no way I would have the gains I have overall. There's no freaking way. I would be getting beat by the S&P 500. There's no doubt about that, right? So, and also you got to stay away from those unprofitable ones, because that hurt me so much in 2021, getting into a lot of those stocks. I mean, imagine if I avoided that whole crap. I'd be sitting on 30 or 40% gains right now on a year after year basis. That's ridiculous. I'd be probably 3Xing or 4X in S&P 500 if I didn't go gambler mode in 2021. So that's another key as well. And even with going gambler mode, I still killed it. So, let that be a little food for thought there, okay? Appreciate you guys joining me as always. Thanks so much for being here, folks. I appreciate y'all. Pin comment down there. Black Friday sales coming up. The once-a-year sale, it is the best deal of the best deals of Black Friday. in the world. Okay, $62, you get access to my #1 stock market course ever, $997 value, ability to see the stocks I'm buying and selling in there, see exactly how I diversify a portfolio overall. Yeah, there's no better steal deal you're going to get on Black Friday than that deal. It is 4 days away now, 4 days away. If you're watching this in the future, then guess what? It's even less time. So make sure you check out that. Pin comment down there. We'll send over the deal when it drops on Black Friday. Much love and have a great day.